All right, welcome back. We got a little bit of a different video for you guys today. This is going to be a hybrid of a stock market update based on what has just unfolded in the presidential elections. And I'm also going to give hopefully a couple tips for everybody out there when it comes to investing around the election cycle. So first, let's go ahead and just look at the heat map and see what's going on because there's a lot of volatility in the market and volatility to the upside. We're seeing a ton of green all over the place. Nasdaq, S&P, the Dow Jones all hit all-time highs today. Bitcoin all-time highs. So there's a lot of money moving from certain assets into other assets. So when we're looking at the heat map today, you're seeing everything. Technology, you're seeing financials, you're seeing industrials, energy, consumer, everything. The only red spots are going to be some of the consumer food, some of the unhealthy foods, a little bit of healthcare, real estate, which is interesting. The home builders are down. I'm curious to see why that would be. Utilities are going down. Those are some of the defensive sides of the market. So very risk on movement that we're seeing here. And just quite the moves all over the place. So if we look at my stock market list, the big winners are going to be the crypto stocks, the financial stocks. You've got Tesla up 15%. You've got some global foundries, which I believe is an American chip fab company. And then you've got, again, the financials, Wells Fargo, JP Morgan Chase, more crypto. You've got an oil bull ETF is up. Bitcoin is up 10%. Caterpillar's up 9%. Palantir on a tear. But again, that might be just earnings related. So anyways, you're just seeing a lot of risk on, a lot of big moves here. And when we look at what is being sold, we're seeing the marijuana stocks. You're seeing solar stocks across the board getting hit. Enphase is down 16% today. You're seeing some of the EV stocks down. You're seeing some of these ChargePoint, EVgo. You're seeing some international stocks. Some of the Chinese stocks are down. So definitely a very much sell certain sectors and buy everything else. But it's pretty interesting to see the moves in interest rates. So when we look at some of the commodities, oil was down this morning. It's looking like it's recovering a little bit. You do have gold, which is down 3%, which is kind of interesting. But the big thing I've been looking at today has been the bonds. So the bonds are down big. The bond pricing is down, and the yields on the rates are skyrocketing. So the 30-year yield is up 4% today. You've got the 10-year yield, which is almost up 4% today. So to me, it's super interesting. The market is saying we want things that are going to grow and produce, and we think there's going to be higher inflation based on what the market's doing here. Now, the yield curve is also uninverting at a rapid pace, so that's quite interesting as well, because once we fully get uninverted, we're on we're on recession watch. So a lot of things going on here. You've got the volatility down 20% as well. Amazon hit an all-time high today. Nvidia hit an all-time high today. Just a lot of green all over the place. Out of the Magnificent Seven, it looks like Apple and Meta are the only ones down, and they're basically flat. Everything else is doing pretty well. And, you know, this is going to be pegged to the election, which for sure the election is over, and we are past that catalyst. So now there's a little bit of certainty in the market, and that's why you're also seeing the volatility collapse. So we are just seeing the VIX just collapse here from 23 back down to 16. So there's less uncertainty in the market. Now the market can say, okay, we're going to place our bets here and there, whatever is in that person's plan or portfolio, and they're starting to execute that there. But to me, it's the bonds that is very interesting to me, because we are just seeing these yields move a lot. So the 10-year yield is up 4%. And tomorrow we have the Fed meeting. The Fed's going to come out and cut interest rates. But does it even matter if the bond yields keep going up? So since the Fed has, if the Fed cuts 25 basis points tomorrow, which is most likely what they're going to do, that would be 75 basis points in cuts so far. Since the Fed started cutting rates, the bonds are up 80 basis points. So since the Fed has started cutting rates, the yields are actually higher. So very, very interesting what is going on here in the bond market. And I think a lot of it is just the uninversion of the yield curve needs to happen, and it's happening rapidly. And yeah, so to me, this is very fascinating to see. You're seeing mortgage rates continuing to climb. And that was the closing bell here. Everything closing at a record high. The NASDAQ up almost 3% today. The S&P, huge move. You rarely see 2% moves on the S&P, and it's up 2.5% today. So pretty unbelievable moves here. So that's our little recap of what has happened in the market today. And I want to go over some bullet points I put together here that'll help us when it comes to navigating this market volatility post-election. So market volatility post-election, we typically see some big swings after elections, but don't react impulsively. Don't go in something, out of something. You want to stick to your long-term portfolio plans. So focus on long-term investing approach, growth and stability over the long run, not short-term market reactions. Just because Tesla's up 15% today doesn't mean you should sell all your end phase and go into Tesla because Elon Musk is close to someone in the White House. So don't make any rash decisions right now based on what has happened politically. Let me adjust this here. Let's go 250. Okay. So you want to focus on the quality companies, invest in strong, fundamentally strong businesses with solid growth prospects. Now, if we go back to that list that we were just looking at of the winners and losers, to me, what's a common denominator there is the winners also have recently come out with great earnings and are in a good uptrend. The losers are in the inverse of that. They are not beating earnings. They are not in an uptrend. They're in a downtrend. So some of those solar companies, EV stocks, not doing so hot. But if you look at a Tesla, an Amazon, an Nvidia, those are great companies that are performing at a very high clip. Palantir, these companies are killing it right now. So the market's going to reward the winners that have been doing well, and they're going to punish the losers that have been doing poorly. And yes, there's a little bit of sector rotation based on the incoming president. But at the same time, the market is past a big uncertain period, and now there's certainty. So now money's going into the winners and going away from the losers. So again, just avoid reactionary moves. Don't make an investment decision based on who wins or loses an election. Stay focused on your strategy. If your team won or if your team lost, shouldn't matter based on what you're going to do for your retirement or your portfolio. So the president's influence on the markets. So presidential policies can affect markets, but shouldn't dictate your individual stock choices. Stick to the broader trend. So for example, solar. I don't have Enphase in my portfolio anymore, but it's looking very attractive to me right now. Now you can make the argument for, and this is just a great example, you can make the argument for Enphase that with the current administration coming in, there are going to be less government cheese going towards solar projects, tax rebates, and things like that. They're going to focus more on oil subsidies, oil drilling, and things like that. But at the end of the day, I can't have an oil rig at my house to charge my car, to run this computer, to run all the electronics in my house. So there's still going to be a demand for solar. The question is going to be the rate of adoption may slow a little bit, and that's why the market is reacting and selling off solar. It's because they're seeing the light at the end of the tunnel get further and further away. But to me, that's still a broader trend that I want to be involved in, the solar industry, and I want to pick the right company, the good company out of that sector. And to me, Enphase is one of those companies that is in the right long-term trend. It just may take a little bit longer for some of the adoption to come that I'm expecting to see. But it's not that solar is just some fundamentally poor way of a consumer to produce electricity from their house. So anyways, that's a good example. Focus on the broader trends. This could be an opportunity for Enphase. It could have a lot further to drop based on their earnings the next couple of quarters, but we'll have to wait and see. So if you're making these individual decisions based on who is in office, that is not trading, that is not investing, that is trading. So understand the difference between the short-term trading and reactions to these events and long-term investing. Focus on company value, so the intrinsic value. Focus on their earnings and the long-term trend here. So for example, if you wanted to play this as a trade, you could have been a little heavier invested into the crypto sector, because there was, to me, it looked like there was a skewed bet to the upside. If one party were to win, you would see a nice pop in crypto, but it could have been the inverse as well. If that party were to lose, you may see a knee-jerk reaction, a sell-off, and a recovery that would have to ensue after that. So that would be a trade, not an investment. So understand what you're doing here and know, if I go out and buy a bunch of oil stocks today, is that an investment or is that a trade? Does the fundamental outlook of the business, is it looking really good for the next 4 years or the next 40 years? You have to determine that based on what you're seeing in that industry. And so just stick to your plan. Stay committed to your investments. If you're a big bull on Enphase, there shouldn't be a huge deterrent, right? We still need to see what the new administration is going to put put through Congress and through the Senate. See what can actually get done, and if there's really going to be any big changes, or if things stay status quo. For example, I'm in California. California is still going to have a lot of state subsidies for solar. Now the question is there going to be less federal subsidies for solar? What does that look like? Sector opportunities. So invest in sectors based on your research on long-term potential, not political preference. So some of these are kind of redundant, but I think they're worth repeating. Have the investor mindset. Cultivate a disciplined long-term perspective, focusing on consistent investing rather than the short-term news. So even if a company has bad earnings for one quarter, does that mean sell it all and get out? Tesla had a bunch of bad quarters. Now we're at a 52-week high. Could be the case for, I'm using Enphase and Tesla as examples. That could be the case for Enphase. They could go through another year of bad earnings, but we look forward from a year from now and they're back to a 52-week high. We're going to end on this chart here. So this is, I love looking at this chart. Let me zoom out so we can see the whole deal. This is $1 invested in the S&P over the presidential lifetimes here. So we can see that one color doesn't really matter. This chart goes up and to the right. Unless you're this poor guy down here in 1929, Hoover. He had a rough go at it. But regardless, there is a basis of an uptrend here. So yes, there's ups, there's downs. You're going to have 2001 bubble, 2008 bubble, pandemic bubble, and crashes, all those things. But at the end of the day, if you stick with it long enough, this train doesn't stop. So with all that being said, I'm glad the politics is over. I'm not a political person. I think it's important to vote, but we're all on the same team. We're on Train America, Team America, and we're all friends, family, neighbors, and I hope we can all just get through, put all this politics stuff behind us, and just try and make this place a nice, better, habitable place for everybody. So that's my thoughts on investing around the election. basically what I'm saying is you shouldn't. You should invest for the long term. And if you're going to trade around the election, know that and know that that is a trade, and it's very similar to gambling because it's almost like a coin flip. And if you're going to do that, just make sure you have the parameters set for you to not blow up your retirement. Do it in a separate account. Do it with play money. Do bet small, but don't do anything that's going to ruin your retirement and mess up your plan. So that's all I got for you guys. I hope this helps, and have a great rest of your week. Peace out.